The dot-com bubble was a major period of stock market speculation during the late 90s. Let's look at how it happened. At its core, the bubble was driven by extreme investor excitement over the potential of the internet, often without regard for actual business profits. The Nasdaq index reached record highs in early 2000, fueled by massive capital flowing into companies that had little revenue to show for it. Investors prioritized rapid expansion and website traffic over traditional measures of success, like cash flow or profitability. The market eventually realized that business fundamentals matter. Companies that could not generate revenue struggled to survive when the influx of cash stalled. As shown here, the rapid ascent of the late 90s was followed by a significant multi-year correction as the markets reset. This famous quote reminds us that market bubbles can persist for a long time, making them difficult to time or predict. Understanding past market cycles helps investors maintain perspective. Thanks for watching, and remember to keep learning about how markets move.